Good evening. Ira Epstein of Linn and Associates with your SPDR ETF recap. And this is for Wednesday, the 14th of October, 2020, about 7 o'clock at night. You know, the event of the day was interesting. Finally, Mr. Mnuchin, our Treasury Secretary, came honest with everybody. He hasn't said much. So in all fairness to him, when I say that, he hasn't lied to anyone. But the honesty came out today when he said they're still very far apart. Mitch McConnell's been saying that forever. At first I was saying he wasn't in the loop. I'm the one that wasn't in the loop. He was dead right. They weren't going to get anything done. He could bring all the programs he wants to the Senate floor to help his fellow senators, if you will, get some window dressing for the election. But nothing they do is going to pass in the House. The House is under Ms. Pelosi, determined to knock out the president. And in the process, the American public gets hurt. Period. You can say I'm wrong. It's okay. I'm not taking a political side. But people need help. And politics should be secondary. These people, all sides, Democrats, Republicans, represent us. And people that have the restaurants, the other parts that need this so desperate help. What the heck? Pass a program, find the number. Everybody's wrong. I'm not a fan of politicians. I'm sure you know that by now if you watch me, and I don't want to get political, but it's a crime, and it's all going to be this way right in front of the election, because the bigger thing is who wins the presidency and can the Democrats take control of the Senate. That is what's on the table. With that in mind, you broke down when that happened in the stock indices. The metal markets gave up their gains because what you've taken off the table is the stimulus package. Most of us knew it wasn't coming. So now the market can move on to other things, and if there's a surprise, it's that something gets done. Maybe magically everybody wakes up and calm heads prevail and they all say, hey, we're going to help the people in front of this, and everybody gets points for it. I don't know. But right now that's not the case. So when that's not the case, I go back to my charts. Now, I pointed out to you that charts like to get gaps filled. This gap was filled when the market came back down here. On the way up, you came back, filled that gap. And what I think you're doing right now is coming in to fill a gap right in there. That's what I think's going on. The chart pattern is still bullish. Until you take out 116.76 and XLK, this market is still friendly. When I take a look at the 18-day average of closes, I told you it was going to jump up. Well, it went right to that number. And yesterday the number, where were we? Yesterday's number was 116.18. So you know it's going to be well over that tomorrow. So the support of the market before it can break through there is going to run into the first real layer of support, wherever this 18-day average is, when the market opens up on Thursday morning. I'll be watching that. Where's the resistance? Well, we've seen it. It's the upper Bollinger Band. Markets only stay over the black dashed line 5% of the time or under it. You have to learn that the market looks its most bullish when it's over it. And that's where the euphoria is hitting. Unfortunately, that comes out of a market. As a chartist, you have to learn that what you're trying to do is keep your sanity about you and do the same right things over and over. Some will argue, what does the word right in quotes mean? Well, I have my own definition, and I teach it in my charting course, but this chart is still bullish. The market is still got an embedded reading. Now, an embedded reading happens when the two numbers that make up a slow stochastic get up for several days or more and go sideways over 80. Until the red line closes back under 80, I contend that on breaks, the smart money is buying. Close under 80, they come out of the market. It's that simple. There's other parts to it, of course, but I'm never going to give you all my secrets in this free part here. You get higher lows. Now you're getting, for the first time, a bit of a correction. Remember what we had, this Gorilla Glue trade? What do I call Gorilla Glue? It means that every day the market hits the upper Bollinger Band. Today is the very first day it didn't. So I wouldn't be surprised to get a bit more drifting in the market, but that doesn't mean the pros aren't going to be there buying with this embedded reading still in place. When I come to the industrial sector, how many days do we have of sideways action? Here over 80. We know we had today. Let me see if I can get this to move. There we go. Today, yesterday, day before. We have our 3 days. Until the red line closes under 80, I will argue that the pros are going to buy these breaks, looking to get back to the upper Bollinger Band, and they'll bail when that red line gets under the 80 on a closing basis. You can wiggle there. Now, when I say on a closing basis, you know, if you were to close under 80, let's say it's 70.7995, all right, or 79.95. It's a hard decision because if you close towards the top part of the day's range, it probably is going to jump back into embedded. If you're at the very bottom of it, it probably drops down. You might want to replay this because I'm giving you a little secret. Higher lows, lower highs. I don't know what to do with a chart like that on XLE. QQQ. Until you lose the embedded reading, this chart, in my opinion, is getting bought on this break. Lose it, maybe we get back to the 18-day average and lose that embedded reading, but you haven't done it yet. I'm not keen on the emerging market chart. It won't take much if you get under 65.19 to get a pattern of lower highs, lower lows, dropping back to the 18-day average of closes, or a goal to get there, and momentum here is not embedded. GLD, you are stuck against this 18-day average. The pattern on the chart is one of higher lows, higher highs. Take out 177.10, and I could easily get an objective to the downside of 175.27 to 174.51. If you did that, you'd probably take the momentum and break it down as well. The bulls have to defend the market at 177.89 and prevent that from happening if they want to keep control. In GDX, what do you do the first time you hit, if you listen to me at least, when you hit an upper Bollinger Band? I say it repeatedly. Go back, all my videos are there. First time you hit it, I think the smart, quote unquote, smart money takes money off the table, jams their stop way up, you're overbought. You got to be praying some event happens, just keep it going. The odds are you've run into your brick wall as you have back here. So trading that, just what I said, and I think the men that bought, or the women that bought, both sides, the longer term, when you got down on my longer term charts, and I do on the weekends, remember this, for my subscribers, I do for all these charts that I do, and there's 37 of them now, I do a review for longer term trading. So people say to me often, well, Ira, what you're doing is short term. I'm doing short term because these are daily charts. When you want to do the long term, you tune in on my Saturday video. Why? And it's not here free. It's not going to be here free. And what that does is that gives you buy here, sell there for the bigger picture. And those trades can last a very long period of time. I'm talking months. They can go on and on and on. So I do the other part. TLT. What was I looking for here? I was looking for this market to get back to the 18-day average and have a real serious problem there. That's exactly what happened. I based it on the futures contracts of the bonds and the notes, and it tied together. Of course, TLT is very tied together to the futures. FXE, you can get an out-and-out sell signal by getting under 110.38. What would happen? You then have lower highs, lower low, putting into play this whole area. So at this point in time, I have a higher high. I've got a higher high and I got higher lows. And all of a sudden this low, 110.38, if you take a look at this one, 110.42, we broke through it. So a lower low is what I mean to say, higher high. You can't get a buy signal, you can get a sell signal out of this formation by taking that number out, and if it does, the target gets in there unless you go back up and make a new high on this move. You put it together and you get a game plan. And that's really what you're doing. You know, I appreciate you all watching me, but you're looking for game plans. I know it, you know it. A lot of people like everything for free. I'm only going to give you X amount for free. Become a subscriber, I'll do more and more. In fact, I ask you, give me ETFs you want me to cover. In fact, I'm saying it now. If there's none that you see, let me know. I will put them in my subscriber videos. I want to get over 40 of those. And as I said, I cover everything from short-term trading to longer-term trading. I'm up to 37 charts, I believe, now on my SPDR ETF. I start you off at 3 in the afternoon or 4, it depends what time I start recording, with fundamentals. I tell you what tomorrow's reports are going to be. Like right now, we're going to be looking in the morning at the Philly Fed, the Empire State unemployment claims. I put those out. My subscribers already know what the estimates are, where we're at on it. Then I give them a taste of what's going on. Has the UK declared a state of emergency as well? Are they going to lock down, as we saw in France today? Every major city in France now has to close at 9 p.m. at night. Their bars and other social areas, and they can reopen at 6. People can travel on public transportation, but they're back into their lockdowns, and if the case numbers pick up, it'll get even more severe. So you want to know these things because it impacts what you're doing in these markets. And I start you off with them. I give you at the end of the day that people that take my combo package of this, and when I put together my morning video for futures, they got the whole picture. This is what we cover, and as I said, there's 3 more charts on there. So how do you get this? How do you learn about it? Just simply go to our website under the word research. It's that simple. The cost is $8.95 for 30 days. So let's assume you don't like it. You lost $8.95. Let's assume you love it. You found something that you're bouncing your ideas off of. As I said, I also hold live webinars. I'm intending next week to hold my first one this month. I haven't held any, but I had to finish up all my house chores. And I'm actually going to get a sink. They claim it's going to come in either on Friday or Tuesday. We have been without one in the kitchen for a month. Do that. Try to see it. And I'm still married, which is wonderful. You have a great day. I will talk to you all tomorrow. Take care.